The following cost and inventory data are taken from the accounting records for the Mason Company for the year just completed. Prepare a schedule of cost of goods manufactured and the cost of goods sold section of the Mason Company's income statement for the year. Rather than prepare schedules, we're going to complete the flow diagram to calculate our cost of goods manufactured and our cost of goods sold for the Mason Company. Let's begin by recording the information that's given. We're told that our direct labor cost is $70,000. This shows up as an addition to work in process. Our purchases of raw material, $118,000. Our manufacturing overhead applied during the period is $80,000. Our advertising expenses are a period expense and will get recorded directly on our income statement. Sales salary are also a period expense and will get recorded directly on the income statement, as will the depreciation on our office equipment of $3,000. Now let's go ahead and pick up our inventory balances. We're given beginning and ending balances for raw materials, work in process, and finished goods. Our beginning raw materials inventory balance, we're told, is $7,000, and the ending balance is $15,000. Our work in process balance at the beginning of the year is $10,000, and the ending balance is $5,000. Our finished goods balance at the beginning of the year is $20,000, and the ending balance is $35,000. Let's go ahead now and complete our flowchart to calculate our cost of goods manufactured and our cost of goods sold. If we take the $7,000 in beginning raw materials and inventory and add to it our purchases of $118,000, we get raw materials available for use in production of $125,000. We know both the left and the right-hand sides of our boxes must equal, so we can quickly calculate the cost of direct materials used in production. This will be the $125,000 in raw materials available minus the $15,000 in ending raw materials inventory. We use $110,000 in raw materials. Notice this appears as an addition to our work in process account. Our total manufacturing cost for the period then will be our beginning work in process of $10,000 plus our $110,000 in direct materials, the $70,000 in direct labor, and the $80,000 in manufacturing overhead. We need to account for a total manufacturing cost of $270,000. These costs will either be left in ending work in process or transferred out to finished goods, which will be our cost of goods manufactured. Our cost of goods manufactured then is $265,000. This is the $270,000 in total cost minus the value assigned to the partially completed units left in ending work in process inventory. Moving over then to our schedule of finished goods, we can see that we have beginning finished goods of $20,000, and we add to that the $265,000 of cost of goods manufactured during the period, which means we've got $285,000 in goods available for sale. These goods are either left in ending finished goods inventory or become part of cost of goods sold, and we can see our cost of goods sold is $250,000.